My name is Jeffrey Davis, and I'm the host of Radio Entrepreneurs, and I'm having a great time today because we have been doing some interviews over at Hemenway Barnes, LLP, downtown Boston. I'm overlooking the beautiful city today. A little bit overcast. I'm here with my good friend Mark Z. Mark Z, Legal Staffing, Longfellow Staffing. Welcome, Mark.
Jeff, great to be here. The weather is, this is the kind of weather I want when you're at Hemenway and Barnes with the best and the brightest.
Right, and I know, probably more than anybody I know, you like attorneys. So I'll let you introduce the next one.
This is like the playoffs for Mark Z. Well, and speaking of star players, I want to introduce John Siciliano, who's a senior partner at Hemenway and Barnes. John, great to have you on the show.
Thank you. It's great to be here.
Great, John. What's our topic today?
So today we're going to talk a little bit about interest rates and as they relate to the present real estate market and where they might be going.
Oh, that's
Perfect.
that's an interesting intellectual topic for me, but also a personal topic because I think we're all worried about this one. Why do you think this is such an important topic today?
I think it's an important topic today because all indications from the popular press and the Fed and everybody you talk to is that eventually interest rates are going to have to go up. And we've had a really long run of low interest rates, really long run of really low interest rates. And developers, real estate developers more than anybody, have probably taken advantage of that in the sense that their cost of borrowing is very low, decreasing their development and project costs, and they also are the inverse on the other side, on their customer side. Their costs of borrowing are low if you're selling condos or homes, and in some of the things though we've seen over the last 6-7 years though is that the apartment market, and at least in these urban environments, has been more robust than the condo market, and a lot of developers who had been building condos to sell them on a unit by unit basis are now building apartment buildings.
Interesting.
And renting them.
Well, that's news to me.
Is that right? Yeah.
Right. Can you explain that away for me?
Sure. Well, I think as you know, we all go back to sort of 2008 and 2009 as the sort of touchstone, and prior to that, condos had been the sort of highest value real estate development in an urban environment because you had ready and willing purchasers who were able to get loans pretty easily and afford these big condo prices. That all changed in 2008, and underwriting criteria got harder. People lost jobs. There were no longer buyers. Now, as the markets come back, the underwriting criteria for those potential buyers has remained is difficult. People have less security about their jobs than maybe they did, are not willing to invest and buy a condo, but they have to live somewhere. The younger generation wants to live near where they work,
right?
And they want to rent, and
right.
that's and the market's reacted, and on the investors in sort of selling these projects, the institutional investors, as interest rates have stayed low, you can't make yield on bonds or a return on bonds and things like that. These real estate developments that have good positive stream of rental income have been a good alternative. So for all those reasons,
as you're saying this, you're sort of getting me thinking, because that's what I would hope you'd be doing, and I'm thinking about some of the younger people I know in their 30s.
Mm-hmm.
I know when I was in my 30s, I immediately thought about buying a condo.
Sure, correct.
Sure.
And the younger people today I meet, they're not thinking about tying up their money like that. And some of my friends who are of retirement time, because that's a range,
right?
They're looking at renting too because they don't want to be tied down.
Right.
And I'm seeing a lot, and I hadn't thought of that until you brought it up to me.
Yeah. Go ahead.
Oh, no, what I was going to say is also, unfortunately, the millennials that are again near the urban centers, they probably have a lot of student loans too, and they're saying we have to take care of these loans. I don't want to tie up that type of money.
Right. Right. Yeah. Exactly. They don't want to. And people saw, there's a generation of both the retirees and the younger generation that saw what happened in 2008 when the bottom drops out and you're stuck with
property
right. That is not worth what you've borrowed to buy it.
I know people who are still holding on to proproperty in Florida.
Yeah, no places.
Right.
That, in Arizona and there's a lot.
Well, the world is flat. Does the European and the world economy affect what's going on here as well?
It probably does. It'd be interesting to see. I haven't given that a whole lot of thought of how that plays into it. It will obviously play into, I think, some of how the interest rate when and how much interest rates go up, in that the economy, all indications are that the Fed will not raise interest rates until they are very comfortable, and this is just based on what I read. I'm not an economist, but until they're very comfortable that the U.S. economy is strong and growing. And as the dollar is strength is improved in value, that may give them a little pause. I don't know. As exports are less robust than they would be in a lower dollar environment.
Right, but going back to not only the foreign markets but the current market, I mean, at some point, the millennials, the rates are going to go up, and the millennials who are earning the living have to start thinking about purchases.
Sure, right, and I think especially in urban markets, the value, real estate values are people look at it, especially young people look at it on a month-to-month basis. What can I afford on a monthly basis?
Right.
And and interest rates are a part of that equation, and the cost of the property is part of that equation. And so as interest rates go up, values may come down, and so they may very well be in the same place. I think you're right, though. They will start to think about investing, and as they'll see the values come down, partly for that reason, that interest rates are going up. They see it as an opportunity to buy, and you could certainly see a scenario where a year from now we're sitting here talking about how it's gone back to condos as the more valuable real estate development.